On my last earnings prediction video, there was a request to cover some possible Nvidia option plays. So I did some research and wanted to share my thoughts. If you want me to cover some of your investing related questions as well, leave a comment and subscribe to see when that video about your question is made. With that, let's get into it. One of the first things to do in figuring out what you want to do for an options play is to just stop and go to a casino instead. You'll lose a lot less money and have a much better time. But if casinos are illegal in your state and you have to get your gambling high with some other way, then the next most important thing is to better understand the general market sentiment and how the stock you want to trade fits in with this market sentiment. This includes both the long-term and the short-term sentiment. It's no secret that I hold a very bearish sentiment about the market at the present. The apes of Wall Street bets are claiming that a Santa rally is still coming, but I'm going to go with the trusted inverse Wall Street bets for this one and continue with my negative sentiment, at least for the end of the year. How does Nvidia fit into all this though? Given it's a tech stock, it's been hampered by this negative market pressure as well, and government regulations regarding its sales to China haven't helped. Additionally, their new GPUs are leaving much to be desired. My short-term feeling about Nvidia is also somewhat bearish. Now you might be asking, well, what about its 25% increase over the past month? Yeah, 25% growth in a month is great, but I think it's pretty unsustainable in current market conditions. Now, I do know though that I'm one of the few that hold this bearish sentiment. However, Nvidia is a major player with their AI and data center superiority with regards to chips, so it is here to stay. Additionally, I do also believe that it is a bit oversold due to the Chinese trade restrictions. And with this in mind, I do believe the long-term outlook for Nvidia is quite bullish, and I think that within the next year or so, it will bounce back. Now that we have some idea about the short and long-term outlook on Nvidia, let's take a look at some of the more interesting parts. The first thing that pops out to me is implied volatility. Right now, Nvidia's implied volatility is quite low. That's really good if we want to buy options, but not so great if we want to sell them, as implied volatility greatly impacts the price of options. An idea then is to buy options during weeks with low projected implied volatility, like the week of 9 December and 17 January of 2025, and sell options during weeks with high projected implied volatility, like this week and the week of 17 March 2023. So, what does a short-term option play look like in these conditions? Since we are bearish in terms of Nvidia's stock, we can simply buy a cheap put for the next week and call it a day. That's kind of lame though. So, let me walk you through some possible plays given relative expected implied volatility. The first potential play is buying a butterfly for the week ending on 9 December. This week, if you remember, has pretty low implied volatility, so this is a prime time to buy options. The butterfly proposed does not have standard wings, as the higher strike long call is disproportionately out of the money. Regardless, this is a credit play that will net you a profit so long as Nvidia stock is under $165.44 or so by the end of trading day on 9 December. However, if you don't like credit spreads, then you can check out this debit iron condor. For this trade, we will sell an iron condor during a week of relative high implied volatility. And as long as Nvidia stock remains under $165.81 or so, by the end of the week of December 16th, then we can make a good amount of profit. A fun potential long-term play could be to buy a long in-the-money call for relatively cheap, and then sell calls at a higher strike price than your option in between now and January of 2025. Of course, this strategy is quite labor-intensive, so if you get bored with it, you can just continue to sell poor man covered calls until you've actualized a sufficient level of gains. Then you can just sell the option. Now, this option will make you money in January of 2025, so long as Nvidia is above $210.35. A quick note, the last time Nvidia was at this price point was in April of this year, so this mark of $210.35 is very realistic. Now, just a quick caveat, I am by no means a financial advisor, nor am I personally recommending these trades. With that little legal caveat out of the way, let me summarize my thesis regarding Nvidia options plays. The economy is pretty meh right now, and I believe that the short term for Nvidia will be the same, despite its 20% rally recently. However, Nvidia is a great company with a product that will continue to be in demand well into the future. As such, I feel quite bullish long term with this country, despite my bearish short term outlook. With this in mind, I constructed some option strategies that take advantage of my sentiment about Nvidia based upon its projected implied volatility to maximize my earning potential. Now, I hope you enjoyed this video. If you did, please leave more comments if you have any other investing or financial topics that you'd like me to cover, and make sure to subscribe for future content. Until then, happy investing.